Thanks, Gwen. Good afternoon, everybody. Troilus is a new story, a new company. We've only been on the market for about 20 months, and I'm excited to introduce it to you. In 10 minutes, I'm going to tell you a whole bunch, so meet us at the booth afterwards. We are located in northern Quebec, 150 kilometers north of Chibougamau. Troilus is a past producer. I'll go into the details in a moment. However, in the last 10 years, 12 mines have attempted to be permitted in Quebec. Every single one was permitted in 24 months or less, from scratch. Great mining jurisdiction, lots of infrastructure. We have in excess of $400 million in inherited infrastructure on site that I'll show you. That is going to expedite production, lower capital costs, and drive value to our shareholders. Large and growing mineral resource. When we structured the company and we bought the asset from First Quantum 3 years ago, we had just over 2 million ounces low-grade underground gold X equivalent at Agnico. We have drilled 72,000 meters over 18 months, and we've added over 4.5 million ounces, and we haven't shut anything out. We are now the largest developing gold deposit in Quebec. So lots of exploration potential, clear path to production via open pit and underground in a staged approach, and great stakeholder support institutionally, First Nations, and shareholders. The history of Troilus is long, but Gwen nailed it. Inmet was a global base metal company. They wanted the gold multiple. In the early 80s, they put out for a global exploration focus for gold. They found Troilus, and they defined it our Z87 deposit. From discovery, they drilled out the deposit in 18 months, threw it to the construction team and said, build it. The mine produced 2 million ounces of gold and 70,000 tons of copper over a 14-year mine life. During that time, the moment went to the hands of construction, they never drilled another hole. We are not rocket scientists, we're geologists. And we decided to step back 50 meters from the pit and drill under the old reserve shell, and there just seemed to be a lot more. Troilus was put into production in a $250 gold environment. And so all decisions on that mine were made on that basis. When gold did increase in price, they expanded capacity to exploit it faster. When First Quantum took over Inmet, it was for Cobre Panama La Cruces, and they weren't interested in a lower grade gold deposit in Quebec. On the right side of your page, you'll see our initial resource. That was all underground, 1.8 grams per ton. It was 50 meters wide, ran for 1.5 kilometers. It was 100% analogous to Gold X. And we spent a lot of time with Agnico putting an economic model around that lower grade deposit that only went down to 500 meters so that we could come to market. We expanded that, and then we started stepping out. The main production area was Z87, then we went to the J zone, which were the two open pits. And just by expanding the resource, stepping out from the pits, and putting the first ever structural interpretation to the mineralization, we were able to define 6.4 million ounces of gold. This is the 0.3 cutoff Whittle shell. Will we mine it at 0.3? Probably not. On the right side, you can see the Z87 pit. It went down to 350 meters. On the left side is the J4 pit. You can't even see it. But that is essentially 1 gram equivalent. 1 gram equivalent and 6.4 million ounces. When we went last year, in the beginning of 29, to start our open pit drilling campaign, we had a very clear criteria. We wanted a 1 gram ore body at less than 2.5 to 1 strip. And in a $1,000 and a $950 gold environment, this thing flies. We accomplished that, and we added 2.5 million ounces. I will point you to Z87 South on the right-hand side of the page. That is exactly what Gwen suggested. We stepped back from the edge of the pit. That is zero strip material that running a gram plus that we've extended for 500 meters off the end of the pit. We have everything in white, it just hasn't been drilled. We've only been a company for 20 months. We've been drilling like crazy. There is a lot of opportunity to add a lot of ounces. What I would say is that Our structural interpretation and reinterpretation of the mine has defined a secondary high-grade component. And when I say high-grade, kind of plus 2.5 to 4 grams with some jewel boxes. Every ton of ore that was delivered to the mill when Inmet mined this ran 20% higher grade than they expected. We are seeing that directly related to a structurally controlled overprint, which will help us when we get to the actual mine plan. On the exploration side, we consolidated in 2 transactions last year, 160 square kilometers. We originally had Area 1 there, and then another 100 kilometers to the north we consolidated. And then you can see the 3 claims in the middle. We purchased that from Osisko in November. There are 4 boulders, a quarter the size of this room, running 20 grams right now that we're trying to source. That's how Troilus was found. Of note, no regional exploration ever occurred. You'll see our results from our regional program shortly. The entire belt is associated with a volcanic magnetic load that had never been identified. We now have more targets than we need. To the southwest, 3.5 kilometers is Z87. We announced in December that we drilled 7 holes, 2,500 meters. You'll see those results soon. The belt's certainly opening up. We're quite excited. I put this in just as a way of comparison. Yes, we're a lower grade deposit. We are right now the same tonnage and grade as Malartic when it started. And Malartic created some value, I think. There is no shortage of ounces that we can add. Our focus is about adding good ounces. I have 2 infrastructure slides. This one breaks it down. Pictures speak 1,000 words. We are right off of Rue Nord. We have a 45-kilometer production-ready road into site. Costs $1.5 million a kilometer to build that road. So that's our market cap. We have 85 kilometers of power line. Hydro-Quebec updated it this summer to site. We have a 50 megawatt substation. ABB, we just spent $500 grand upgrading that. We are production ready. We have just run 2.5 kilometers of power line to the pits. The EIA is done, the community consultations are done, permits in. We're within the next 60 days. We'll be the first mine to ever dewater in Quebec, which will be quite a big accomplishment. And then underneath the pictures is 6 square kilometers of a fully permitted tailings pond that at 20,000 tons a day, we have capacity for 6 years without a lift. All that together, you can throw your dart, whatever number you want. We look at it as about $400 million of infrastructure to develop today. From my perspective, on a time cost of capital, is 3 years of permitting. Stakeholder engagement. Troilus was the first IBA ever signed in the James Bay Accord. It was a 14-year successful relationship. When we took over the project, I met with the council at Mistissini. We opened an office in the community, first mining company to do that, and we signed a PDA the next day. 35% of our employees are First Nations, and it's all about getting everybody back to work. Catalyst, we'll be drilling another 35,000 meters. We have 5 drills going right now on the south. We'll be moving them up. As well, you'll be seeing our regional work. You'll be seeing some updated MET work, which is confirming 15 years of data. And we're going to be showing that this isn't just a deposit that's growing, it's a new belt. We are a $50 million market cap, but what really we are 90% institutionally owned. We have 22 institutions that own our name. Management and insiders, we own 10% of the company. We've bought every share in the market post-RTO. And on deals. Since we've come off a restriction in November, we've been 25% of the volume, and we're not stopping. We're well covered by the street, and the Case is our second largest shareholder. So we have the Quebec support, which is key. I've thrown these 2 in because I didn't think I'd actually have time, but I'm just going to throw it out there. Last year was hard. I mean, it's been hard 10 years, but last year was really hard. Least amount of money ever raised in the mining sector. And all of my colleagues here at the conference and on this table have done a spectacular job moving their projects forward. The ability to raise capital and move your projects forward in a bad market is going to allow you to be ahead of the curve when you get out. And then it's already been brought up. Consolidation is happening. We found ounces at $3 an ounce, $3 per ounce In the ground, the market is at $171 finding costs now. So I think consolidation occurs. Thanks.